Okay, we are going deep on this one. Some of you sent in some seriously thought-provoking stuff from Andranik Agazarian's Dawn of the Asian Millennium.
Right.
And let me tell you, this book.
It's a doozy.
This book does not pull any punches.
No, it does not.
Especially when it comes to the U.S. economy.
It's fascinating how Agazarian ties these massive global shifts, like, the rise of Asia and the potential for another Cold War.
Right, right.
Directly to, like, what's happening on Wall Street, Main Street, right here, right now, today.
Yeah, no, he does. He paints a pretty stark picture. I mean, like, almost right out of the gate. He opens with this very powerful quote from Ron Paul,
Okay.
who basically comes right out and says, the Federal Reserve, the Fed, they are keeping the U.S. economy alive like a patient on life support.
Yeah, propped up, completely artificial.
Yeah, and in fact, Agazarian himself, he compares the U.S. economy to, and I quote, a sick man.
Okay.
Hooked on the Fed's interventions.
It's a powerful analogy, for sure.
Yeah.
And I think it's an analogy that a lot of people can kind of wrap their heads around.
Right.
Because, I mean, we all know what happens when you have a patient who's kind of, constantly being given medication, constantly being propped up.
Yeah, they don't really get better, do they?
They don't. Right. And, in fact, they can become dependent on it.
Right.
And that's the real concern here, this potential, what economists call a moral hazard that's created by the Fed's actions, especially since the 2020 crash.
A moral hazard.
A moral hazard, yeah.
Mm-hmm.
So imagine knowing you'll be bailed out.
Okay.
No matter how big of a risk you take,
Yeah.
you'd be very tempted to gamble.
Oh, absolutely. Yeah, why not?
Why not?
No, you've got nothing to lose.
Exactly. And so that's the concern here, right? Is the Fed, by constantly intervening, constantly bailing out,
Right, are they encouraging riskier and riskier?
Riskier behavior, exactly.
Behavior.
And, Agazarian argues that we've already seen this play out.
Well, let's talk about that because, I mean, he talks about this idea that the Fed went on this massive spending spree after 2020.
Oh, yeah?
To try to, like, prop everything up.
Unprecedented.
Yeah.
The scale of intervention was completely unprecedented.
Unprecedented compared to even 2008.
Even compared to 2008. Remember those bailouts?
Right.
Multiply that.
Yeah.
And then some. We're talking trillions.
Trillions.
With a T of dollars pumped into the economy.
So where does all that money go? I mean, like, what are they spending it on specifically?
Well, so, for example,
Okay.
they lent, get this, $600 billion.
$600 billion.
Directly to companies.
Directly to companies.
Directly to companies. That's unheard of.
Wow, that's not just handing out loans. That's like propping up entire industries.
Industries, exactly.
Wow. And that was it? Or was there more?
Oh, no, that's just the tip of the iceberg.
Oh, really?
It wasn't just direct loans. They also bought up tons of mortgage-backed securities.
Mortgage-backed securities. So that's like those bundles of home loans.
Exactly.
All packaged together.
Yep.
Sold as investment.
And sold as investments. And, not to get too into the weeds, but the problem is they bought up a lot of really risky ones.
Oh, okay. So this is, like, we're talking about the same kind of stuff that...
Same kind of stuff.
That fueled the 2008 crisis.
That fueled the 2008 crisis. These subprime mortgages.
Subprime.
All bundled up. Wow. Made to look nice and shiny.
So they essentially, they repeated
the same
playbook, even after it blew up in their faces in 2008.
Well, it makes you wonder, doesn't it?
It really does.
And that's what Agazarian wants us to think about. If the government is going to keep taking on all this risk, if they're essentially guaranteeing that these big players, the too big to fails,
right,
won't be allowed to fail, where does that leave individual investors?
That's a good question.
Like you, listening to this right now,
Right.
What happens to your savings? Your 401k? When the music stops,
right.
Who's left holding the bag?
Who pays for all of this?
Exactly.
It's funny you should mention that because Agazarian uses this, like, really interesting analogy in his book.
Okay.
He compares the whole situation with junk bonds to the art world.
Okay.
Specifically, he talks about how Charles Saatchi,
oh, right, yeah,
the art collector,
right,
created a market for what was considered, back in the day, junk art.
Yeah. I'm with you.
So basically, like, Saatchi buys up a ton of works from these unknown up-and-coming artists, right? Generates all this buzz and hype, gets the critics talking, and suddenly this junk art is like the thing to have.
It's the next big thing, right?
And people are like paying a premium for something that was considered worthless, practically worthless, like a few years ago.
Right. It's all about creating that market, creating that demand.
Exactly. And that's what Agazarian is saying the Fed might be doing with junk bonds, right?
Yeah, I see where you're going with this.
Like they're buying up all these risky assets, these corporate debts that are considered, you know,
less likely to be repaid.
exactly
Less likely to give you a return on your investment.
And by doing so, they're essentially creating this artificial demand, right?
They're propping up the value.
Yeah.
Just like Sasachi with his art.
Okay, so let's say that's what's happening. Okay.
Mm-hmm.
What does that mean? Like, is this sustainable?
Right.
Or are we, like, setting ourselves up for another bubble that's just going to burst?
That's the million-dollar question, isn't it?
Right.
And that's what makes, reading Agazarian so interesting.
Yeah.
Because he doesn't shy away from these tough questions.
No.
And he's not afraid to kind of, throw out these provocative ideas.
So give us an example then.
Okay, so he talks about this company, Herbalife.
Herbalife. Now, remind me what they do.
They sell, weight loss shakes and supplements, that kind of thing.
Okay.
So they decided to issue, are you ready for this?
Yes.
$600 million.
$600 million for weight loss shakes.
$600 million worth of junk bonds.
On weight loss shakes? What are they doing? Investing in a new protein powder formula or something?
Not exactly, no. They use a big chunk of that money to buy back their own stock.
Wait, to buy back their own stock?
Yeah, it's a common practice.
Oh.
Companies use it to boost their share price,
Sure.
But in this case, it gets even more interesting.
Okay, how so?
Because of who was involved. Carl Icahn.
Wait, Carl Icahn, the billionaire investor?
The one and only.
What does he have to do with weight loss shakes?
Well, he was a major investor in Herbalife at the time.
Okay.
And when they issued those junk bonds, he basically told creditors that the money was going to fund his next few luxury homes.
He said that?
Essentially, yeah, he was implying that he would personally profit from this whole scheme.
That's pretty bold to come right out and say it like that.
Well, that's the thing about potential bubbles, right?
Yeah.
Everyone gets so caught up in the hype.
Right. They think they're going to get in early, make a killing.
Exactly. And they don't stop to think about the consequences.
Or they convince themselves it'll all work out.
Exactly.
Until it doesn't.
Until the music stops.
Right. And then you're left holding the bag.
So where were we? Oh, right. Herbalife.
Okay. So they issued these junk bonds. Carl Icahn's bragging about buying mansions.
Right, but then the credit rating agencies come in.
Oh, right. The people who are supposed to assess the risk of these investments. Then what did they say?
They gave those junk bonds, are you ready for this? A B1 rating.
B1? Okay, so for people who don't speak, like, Wall Street jargon, what does that mean?
It's only 4 notches below investment grade.
So not exactly a glowing endorsement?
Not exactly, but also not huge red flag.
Right.
And that's a concern because remember what happened in 2008?
With the credit rating agencies.
Yeah, they were handing out AAA ratings, the highest possible, to securities that turned out to be virtually worthless.
Right, and that led to the collapse of the housing market.
And a global financial crisis.
Exactly.
So you start to see the parallels here.
Yeah. So are we saying the same thing could happen again, that these credit rating agencies, they're being influenced or pressured?
It's a possibility.
To downplay the risk?
It's a possibility that Agazarian highlights.
Right. And it's not just Herbalife, right?
No. He talks about a bunch of other red flags.
Like what?
Like, for instance, the Mall of America.
The Mall of America? What? Like the giant mall in Minnesota?
The one and only.
Okay.
They recently defaulted on their mortgage-backed bonds.
Wow, that's a big deal, right?
That's a huge indicator of stress in the commercial real estate market.
Right. And then there was that whole thing with that investor who suddenly dumped $333 million worth of real estate funds.
Exactly. And it's like you start to see a pattern here.
Yeah, these aren't just isolated incidents.
These are symptoms
of a much larger problem.
A systemic issue.
And don't forget, we also have the UK selling bonds with negative yields for the first time ever.
Right, where investors are essentially paying the government for the privilege of lending them money.
Which is mind-boggling.
It is mind-boggling.
It makes no sense.
It defies logic, but that's where we are.
So what you're saying is this isn't just a U.S. problem.
Exactly. This is global.
This is the whole world.
Agazarian argues this is a global phenomenon.
Oh.
Central banks all around the world.
Yeah.
Engaging in these unprecedented interventions.
Right, just printing money.
Propping up their economies with cheap credit.
Kicking the can down the road, hoping things will magically fix themselves.
Exactly. And as Agazarian puts it, the definition of insanity is doing the same thing over and over.
And expecting different results.
Precisely.
It's like we're all on this runaway train
Yeah, and nobody wants to hit the brakes.
because they're afraid of what'll happen when we stop.
Exactly. It's like we're addicted to this cheap credit, this easy money.
And the Fed keeps feeding the addiction.
They do. And it's creating all sorts of distortions in the economy.
Right, because they're essentially picking winners and losers.
Right, they're propping up these companies that maybe wouldn't survive otherwise.
Which brings us to this idea of the everything bubble.
Right, and you mentioned earlier, like, the dot-com bubble, the housing crash.
Yeah, those were scary times.
They were, but those were relatively contained, right?
Yeah, it was like tech stocks went crazy, then boom, the bottom fell out.
Same with housing prices.
But Agazarian's arguing that this time it's different.
Much bigger.
Yeah, it's not just one sector. It's like everything.
Everything. Stocks, bonds, real estate.
Cryptocurrencies.
You name it, it's all gotten pumped up.
Because of all this cheap money sloshing around.
Exactly. And, we keep coming back to this quote from Agazarian.
About the definition of insanity.
Yeah, doing the same thing over and over. Yeah.
And expecting different results.
It's like we've learned nothing from history.
And he uses Japan as an example, right?
Yeah, Japan's central bank, the BOJ, they've been at this for decades.
Decades. What happens when you do that?
You end up owning a huge chunk of the stock market.
Really?
The BOJ is now a majority shareholder in something like 40% of listed companies in Japan.
Wow, so they've basically become the market.
Essentially, yeah. And it's created this really weird dynamic.
How so?
Well, you have all these companies, Agazarian calls them zombie companies.
Zombie companies?
Yeah, businesses that are only surviving because of this cheap credit.
Not because they're actually good businesses.
Exactly. They're not innovative. They're not competitive. They're just kind of existing.
Being propped up by the government.
Exactly. And here's the thing. They're sucking the oxygen out of the room.
How so?
All that cheap money, it's going to these zombie companies instead of going to the businesses that are actually trying to do something new.
The innovators, the disruptors.
Exactly. So it's actually stifling real economic growth.
Wow. So it's like this vicious cycle, right?
It really is. And that's why this everything bubble is so concerning.
So where does that leave us?
Yeah.
I mean, what are we supposed to do?
Well, that's the million-dollar question, isn't it?
Yeah. And I don't know if there's an easy answer.
No. And I don't think Agazarian claims to have all the answers either.
Right.
But I think his point is to make us think critically.
To question our assumptions.
Exactly.
Like we assume the Fed will always bail us out, that the markets will always go up.
Right. But history shows us that's not always the case.
No, it doesn't. And I think the big takeaway for me is that we need to be prepared.
We need to be prepared for anything.
Exactly. And I think that starts with knowledge, right?
Absolutely.
Understanding how the system works so we're not just blindly following the herd.
And that's what we've tried to do today, to give you the information.
To empower you.
To empower you.
To make the best decisions for your own financial future.
Exactly. And if you're interested in learning more, I highly recommend checking out Andronic Agazarian's book, Dawn of the Asian Millennium.
It is a fascinating read, and it'll definitely make you think.
It'll challenge your assumptions.
It did mine.
Mine too.
So until next time, keep those questions coming, keep digging deeper.
And most importantly, stay informed.
Because knowledge is power.